We have a Monday, no NWOG to start off the week. No new weekly opening gap. As we know, the schematic in a picture-perfect world in which what we would be looking for would be a smaller time frame buy climax, meaning that you start to slowly see the sellers creeping in to the gap. I think we got our first preliminary signal of supply entering in on the path of least resistance resistance level, which is right beneath the gap. All of this resistance that was built beneath the gap. So then you have to go target the the external area of all of the resistance, meaning the highest high in which you could start finding more supply off of. And we took that out, and what we did was we took that out, and then if you guys take a look at the actual Wednesday price action and the actual breakthrough of price, it happened right here at 545.44. So when you put all of that into conclusion on whether or not we're going to get a breakout failure, you would want to look at just about this rejection candle's high to see if you get slippage beneath, you get a break and base beneath this, all of this resistance, this whole cluster of resistance kind of built together, and then you get a lower high, and then you could short it back down, right? Coming off of a buy climax from the highs, like a 3 higher high distribution. So something that would look essentially something similar to this. We could go to a 15 and you could kind of see it a little bit better, but like you have your first high. Our second high today made very little progress into the gap. And then you obviously have your third high, which would be something like a climactic high to the point where price action starts looking like this into the gap. Something where you get like a high, a sell, a high, a sell, a reversal, another high, a sell, and then that final sell is like faster, first of all, and it starts breaking its previous high or low structure or losing breakout levels, and then you start seeing like that head and shoulders type of setup, and then it just, pushes its way back lower. That's kind of what you look for in terms of a distribution. And these are the three. We have two of those higher highs, in my opinion, as you guys can see within action up here. And I think as we climb our way higher into the gap, if we were to sell off, it's going to be into something very big and very critical on the economic calendar. If you guys took a look at anything I said about in like my live analysis channel, we have Apple and Amazon earnings and jobs data and PMI data on Thursday. Wednesday, we have Microsoft, Meta, GDP, and PCE. That's a very heavy data set. That's a very, very, very heavy day of data. And then we have non-farm payrolls on Friday. So all of these together obviously can move price in a very big way, in a very quick way. And I feel as if, if we see those signs leading into those days, and then we could get through some of the reports and things aren't looking great, I would say the S&P would obviously kind of be primed up here and promising of seeing 527 or at least a gap sweep off of 534. If we see the buy climax happening from the highs. Now, the review that we're looking for, so I took a starter on the bottom of this resistance on the back test of it around 548. And then what happened was we kind of just bled our way to the upside towards 551, 550, which is where I was looking for most of my signs to basically, play off from and looking for more of a heavier add. So I swung over the weekend with 2/5 size, and then I said, I'm going to be coming into the new week looking for a gap trap. But I would preferably like to see the gap trap happening into like Monday or I'm sorry, not Monday, like Tuesday or Wednesday. And then things die hard on like Wednesday to Thursday, just because of the heavy data that we have Wednesday into obviously Thursday. So we got the sell off Monday, meaning we got a nice little sell off today. However, it was very, very bear trappy looking. I saw absolutely crazy volume coming in on the 550, 5500C on the SPX. I saw some crazy things in the tape on like 0D options, and then I also saw kind of how the volume was stalling off down here at the bottom of this daily trend, right? So we broke them base to 548, and then we got another lower high subsequently to that. This is whenever I had my trailing off of 548 up here. And then I had a really nice take profit area, which is essentially just this breakout point on smaller time frames, like your 15. And then we back tested that. That's whenever we had the whole V-shape reversal. But I scaled off most of my puts here because I figured with a gap trap, they don't really want to gap trap everything on a Monday. They want to gap trap people. In terms of people anticipating things through data or earnings. And this is a Monday, right? This is a Monday, and there was not any sort of strong, forceful seller with a lot of speed that kind of came in into the market off of these levels. It was more or less just a very, very, very easily digestible sell from buyers. And then obviously sellers kind of ran out of their gas down here at 545. This held 545 like a champ, and then it just gradually continued its way to the upside. The places in the market that I think could have definitely been a little bit better of a risk to reward short side trade would be over in like Tesla. I really do like the Tesla chart just because we obviously had a major sweep of the external high, which is also tying in really nicely to in confluence over here with the top of the election gap progression level that we also had. And then you could also just kind of tie in like your previous day high or this level up here, whatever one you would really like to do. I mean, you could kind of add all of them in together into a tight little range here. Oh, and then if you guys go into the 5 or the 15, you could see how, I mean, this was definitely a decent short throughout today, risking some of these areas. And this one had a little bit more of a substantial run up into such a critical level. And obviously the signs were relatively clear as you kind of got through this cluster of candles. So in my opinion, Tesla was also a really nice fade opportunity today. If we go over into higher time frame schematics of distribution, if you guys take a look at a distribution schematic, you could start saying that this over here could be something where an MSAL is kind of building out at. And the previous week highs actually were generated off of a gap fill almost, right? So we get into the new trading day here, and we could obviously see on the 15 or on the 5 how this was a super nice rejection off of open, followed by the opportunity for like a retest with a 110 risk, which is basically just right around that opening print and a little bit higher. And if you guys go into the pre-market or you guys go into any of these time frames, you could see how the rejection was actually off a pre-market high leading into the open, right? So whenever you see this pop, whenever you see the relative weakness happening, subsequently to that, this would have been a decent little short in my opinion. And I probably also should have went with the NASDAQ instead because this is more of a tech-driven type of sell, right? We're kind of just looking at tech right now. And what this was doing over here was this was essentially just pulling back into, you could use several gauges in several different areas of the market for you to be able to say, okay, my profit target has been hit, right? Obviously, this is a very big area to hold on a daily candle perspective for the NASDAQ, just because this is the footprint candle close that led to a gap down, and then they finally just filled this gap. This is quite a large gap that people kind of forget about, 2.67%. So whenever you're pulling back into this territory from 466, and that's being lenient, I mean, you could take the high of the candle at 467.83. You could take the previous day low. Just any of those areas are going to be your target to target trading for a Monday with no NWOG. And then obviously with like the trend kind of stalling out, like I said, towards these areas that, you would like to see the trend stall out if you were to be a buyer. That doesn't mean that the buy climax is over. And like I said, anytime you guys ever don't understand a buy climax, I always try to tell you time and time and time again, the climax does not need to happen for your trade. It does not need to happen. It typically is a 3 higher high or a 4 higher high, right? So we kind of got the sign initially, as you guys can see, right around here, right? So if you guys go to the 15 and you zoom out and you take a look at everything going on the S&P chart, you can see how there was one high that kind of showed off a little bit of a seller, right? And then the next following day, we had a really nice type of V-shaped type of recovery. This is where I said Besant actually kind of started the buy climax. And then as you guys could see, once again, we create those new highs into the next following. We'll take off the extended hours. And you guys can see again how this was also kind of like your exhausted high. Obviously, this is not any like thing that I would count too much. It would more or less be this high and this high, right? So if you were to envision a 3 higher high, it would look something like this, where maybe it holds a higher low, it extends and deviates a little bit further away from this high, and then you get a nasty sell-off afterwards where that high would likely be your climactic high up here, right? For the 3 higher highs, first high, second high, third high, all within the gap. And this would all kind of line up with, kind of aligning with like the end of week data or the midweek data. And that's why I said that's the sweet spot, because they always develop these campaigns and finalize those campaigns to be catalyzed through a data set. And like I said, we have GDP on Wednesday, we have PC on Wednesday, we also have Microsoft and Meta reporting on Wednesday, and then we also have Apple and Amazon reporting on Thursday, as well as jobs data and PMI data, and on farm payrolls on Friday, right? So there's nothing that says, this should automatically happen on a Monday. No, 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 no. We could obviously see the move, and we could see a higher high of distribution kind of playing out, right? But you guys got to remember, we're at the shallow part of the gap, okay? So we're in our second higher high. I typically like to see 3 or 4 higher highs. I would like to see a run up into earnings as well, okay? Because typically, whenever I'm favoring distribution off of earnings, I like to see the run up into earnings. Into ER is a very clear thing that I want to really, really, really highlight here. And like I said, we're at the shallow part of the gap, and there's still an upside area that we have to target. Um, so, my schematic would be looking something like this, okay? And if it doesn't play out, it doesn't play out. I'm more and less looking for the signs right now. And I would like to see the break of structure happening maybe after an IV crush, where all of the anticipation in the market and all of the IV kind of cools off after the data, and then maybe we get structure developing for lower highs, and then we fill, bull gaps beneath us, something like, right here into May 5th, which is when Vanna Charm return, and then that would be one more opportunity for this to be fully a path of least resistance all up here to the point where we can easily just climb our way back higher and fill the entirety of the gap, and then start our redistribution once again throughout June all the way back down. That's basically what I would be looking for. I'm still on the bigger perspective of things, and like I've been talking about for literally weeks, bullish in the April OPEX window and now bullish in the May OPEX window. We're still within the window of weakness, so this would be the vulnerable time from now until May 5th to be able to look for the decline into the re-long opportunity from May 5th into May 16th. Dealers are short put May 16th expiration, and obviously with anticipation of bad earnings, or if we do get the bad earnings and whatnot, that could obviously result in an increase of the put skew on this chain if we were to get a sharp decline into May 5th, where structure is obviously developing for just your final last long side trade, flows take over, while your peanut brain people are looking at this to be, a panic drop. Meanwhile, that's not ready yet. So I don't know. We'll see. We also have very, very, very heavy amount of speakers tomorrow, I believe. If someone can confirm, that would be great. But I'm pretty sure we have some big time speakers on deck here for tomorrow. Besant, I believe, talks tomorrow, if I'm not wrong. Maybe a couple other ones as well. What do you mean by dealers being short put? It's just the positioning for the May 16th OPEX. So whenever you're short put, you're technically long equity. And you're hedging that via equity, long equity. Um, so everything. Oh, that was the short side trade today. It wasn't anything special, but if your expectations are of every day being special, then you definitely have issues that you need to resolve yourself because levels were not technically lost here for this to see a promising continuation to the downside. What would have been a promising continuation to the downside would be if the buy climax was happening earlier and then it started really breaking down and then getting super weak pops in return with steep decline, with a steep decline and a failure of like all of these areas, because this is the path of least resistance right around here, right? So if you start breaking beneath that with heavy volume, then you know they were moving their cells from previously being here, I can't even grab my frickin' tool, previously being here, moving up to here, and then pressing aggressively where they previously were, right? That's typically what you look for in a breaker structure, and whenever things really want to start, gaining speed and really gaining a little bit more of like panic, but that was not the case, right? So, with all of that being said, guys, as far as my plan for tomorrow, it's going to be the same thing that I did today. I told you guys I was adding to my short today, and that worked out perfectly for a $6 fade on where I added, which was over here at like 551, pulled down into 540, 540. So technically, I mean, this is about a $6 fade, right? $6.50 almost, right? So fantastic trade over there for just a Monday, just to start the week off, kind of build out a cushion. And I'm not worried about not having any puts right now. I'll wait for the buy climax to see the continuation into the highs, and then we'll look for the reshort, and then obviously the continuation lower. For anyone that thinks, this short's going to be easy, for anyone that thinks, this short's just going to be something where you go full gung-ho and you're just going to go, oh, well, we made a new high, so I'm buying puts. That's not how it works. Monitor the character and the behavior at those highs. Look at the volume, look at the buyers, what are the buyers doing there? There's a little bit of divergence that I would also really like to note over here within QQQ versus SPY. SPY has a much bigger gap to obviously chase and follow through with, as QQQ over here is only however many not even 1% away from the entirety of the gap fill. So we're just right about there with QQQ, and we still have quite some time. That's why I said the schematic for SPY could likely be a gap sweep and a gap trap, especially if like your banks want to lose a little bit of strength and whatnot. But yeah, I mean, I'll probably be using this as a gauge here for tomorrow, 476, just to see what kind of goes on around there. We still have yet to sweep into some bear gaps within the Mag 7. We have a very, very large resistance to break through, which could obviously see a really nice run up into the report for something like Microsoft. And then we go over into NVIDIA. That is a very important chart from 112.20 into 113.37, maybe all the way up to 115. And then we obviously have Tesla with a decent looking digestion day, but that digestion day is going to need more digestion here following this day for me to look at this as a really nice A+ setup. There's still no notable sector yet, but that's why we also kind of just wait for our reports. Also, what I will be looking for would be some sort of spring within the NVDS support. This is a very, very nice gauge actually. Very large volume and very notable volume coming off of technically this gap right here on NVDS. which to me is just signaling off of something a little bit like sketchier. So I want to see if they let slippage happen beneath that gap. Are they going to pop it under, reclaim it, put a higher low, and then continue this thing all the way back higher up towards like the upper extremes at 30? I don't know, right? But I will have an alert set here for NVDS, and I'm very interested to see what kind of happens around this area on the chart. As you guys could see, I mean, the weekly it's a very important area on the weekly chart. So yeah, very, very, very notable level over there. Yields actually did cool off here a little bit today. I don't think they're going to be cooling off for much longer, so I'm very glad that they're kind of pulling back aggressively while the market is making no progress on yields pulling back aggressively. I mean, this is one of the biggest decline within yields of minus 1.17% on the 10-year today. And I mean, this is not in an intraday type of decline too. This is not like a gap down or anything. So yeah, I mean, the fact of yields being weak today and the equity market really not showing anything impressive, it just to me it sounds like I'm right about the gap sweep. So yeah, I don't know. I guess we'll see what goes on over there. We're gonna review the INTC lotto that I got for like 110% today. Did you guys understand anything that I meant about this trade? Be honest. If you didn't, I won't be mad. If you did, fantastic. Um, Earth to anybody? Do you guys want me to review this trade or no? I think I already covered it in the scan, but we had a gap down on earnings. Look at the volume profile. This isn't anything big in regards to relative to the other areas of the range. We have very large volume coming off of lows, and this is technically a spring potential that was built behind all of these days of support and this everlasting support that was finally cracked on this day right here, 209 days later. And then what happened was supply kind of exhausted and couldn't push lower after the spring. So you would see this area as a spring test, meaning a test after the spring in which you obviously see the upside reversion. This is a spring down here on Intel, and there's very heavy accumulative looking patterns. So earnings, we gap down. We gap down into a gap fill off 1951. And then as you guys could see off of 1951, we had quite the large hourly reversal candle. So I just bought some calls for next week, looking for retracement into the gap, because a lot of the volume and a big time buyer actually came in down here. And what this really all is a higher low from the spring test higher low. So it's trying to build out structure ever since the spring potential that we have here April 8th. So with that being said, I mean, all it really was looking for the retracement up more into the bear gap. Not a lot of volume on the bear gap down. What this did was it filled the April 9th gap, remaining leftover gap, and then it sold off through the report. Like I said, the gap down's volume wasn't big, and it's trying to find a higher low on top of a previous higher low, and it's also within a gap fill, right? And then we also saw the buyer entering into this one at 1950 on Friday, right? So that's why I said this is one of those trades where I honestly should have bought like some May 16th expiration or like some end of May expiration with a lot of size here. Or maybe just even into June and then risk this level right here off of 1951 or risk this low down here off 1934 after I entered into this trade. And I entered into this one literally right here. So if you're looking at like a long side position and you have a stop beneath that wick, and then you have like a take profit somewhere within the gap and somewhere within the upper area of the gap until you see a sign of a seller actually participating that is like of size. which would have been kind of up here on this flag failure. And a good area to sell would have been this consolidation. I mean, it's a 3R legitimate full-size trade. I only went with the Lotto size because I don't know, I wasn't really thinking at the time, which it's kind of unfortunate. But yeah, I mean that's my outlook on the market right now, guys. I don't really even want to talk about INTC or any of these other ones. I kind of just want to break down my views on the bigger, broader perspective of the market. Just because we're in very critical areas, in my opinion, within the S&P and within the Nasdaq, right? And we're seeing obviously the signs of redistribution coming in, but we obviously don't have the full criteria of what we want to see for this to be a really nice short opportunity. Obviously, I'm going to be watching TSM on the gaps. So you guys know that like I've been calling distribution for a very long time on this. We have a gap fill up here. We have a previous support back test from this previous gap that was a support. Kind of want to see what goes on up here from 167 into 170. Want to see if they put in an MSAL, a major sign of weakness up here. That would be really, really nice to see. I don't know if they will. Could they pull this one a little bit higher? 100%. Does this look like a decent area though in terms of looking for redistribution off of? In my opinion, yeah, it kind of does. I mean, we have the 50 SMA right around there. We're kind of curling right beneath our 9 and 21 on the daily, which don't really care about that. But I'm just kind of interested to see what goes on with names like this that were in heavy distributions within quarter one. And then there's so many opportunities that we have, like I said, within the scan on these, potential distributions, giving off a further sign of distribution. Just kind of got to take time, get through the data, and get through their reports to be able to see that. And then we'll be able to have the signals on where the swing trades are in the equity market for distributions. So, yeah, that's all I have for tonight, guys. I appreciate you guys tuning in. And yeah, I'll probably be trading SPY again tomorrow. So, yeah, I'll see you guys.